I'm not sure this is the best time to go live, but we're going to try this anyway. So, what the heck? All right. Welcome back to the Capital Pulse. I'm Jeff Ogan, and today we're actually going to be talking about some fun stuff. Taxes. Sorry about that. Making the IRS pauper and making yourself look like a king to the bank. So, what typically happens when you're doing this? You're probably sitting in your CPA's office in mid-April, and what you're going to do is you're going to start high-fiving each other because basically you barely owe a penny to the government for your because you're not making any money. So you experience the first half of the magic trick. Because usually when you walk into the bank back in May and you're looking to borrow money or buy a building, the bank's going to look at your tax returns and they're going to just basically laugh at you and send you out the door and say, "Why are you even talking to me today?" So, what's the magic trick on this particular endeavor? It's called the paperwork paradox. Basically, what happens is you show yourself to be successful enough to be able to get a loan, but at the same time poor enough to not qualify for it. So today we're building the bridge between your tax returns and financing your growth. The insight: you have two magicians that you're working with. First off, the first magician is your CPA, who's designed to make you look in poverty. So let's be real. The job is to minimize your tax liability as much as possible, and they're typically very good at it. And they use depreciation. They use Section 179 depreciation, and they write off a lot of your equipment. They also write off a lot of your company trips to Hawaii on paper, and they make you look like a pauper. They make you look like you don't have any kind of monies. But here's the problem: most bankers look at the pauper and return and take it at face value. They look at the zero balance that you have and the negative cash flow in your business, and they say, "Sorry, no cash flow, no loan." Doesn't work that way. That's where I come in. As an SBA specialist, basically, my job is to take a look at your CPA's creative financing and work and his acts to help you find the real money. We don't look at what you're reported. We actually look at what you earned for the year. So one of the tricks that he typically does, and you're planning to fund your deal in 2026, you need to look at add backs. These are the items your CPA took away that put you back in. We put them back in to show that you're actually a real king and you can afford that loan. So we're going to talk about four different ones right now. Depreciation. This is the paper loss. You didn't actually write a check for 50,000 in depreciation. Your accountant just basically took that and wrote it against your income that you had made because he's taking all your former expenses such as trucks, your building, or all the equipment that you have, and then they expense it out over the year and then they write it off. And the cash is still basically in your pocket. So we can add that back in. Amortization. That's where we take the same thing. If you purchased a business and you amortized it over a certain period of time, you could actually write that off against your business on an annual basis. So what you want to do then, and I can add that back too. So the other one, interest expense. A lot of times we can take a look at the interest expense that you have and we can actually add that back in because of the fact that if we're going to pay off the loan. Rent. What if when you're going to go buy a building and you've been renting for the last couple of years and you want to buy that building so that you can secure your occupancy cost? That one, we can actually add back your rent to show that you're not going to be paying that anymore in the future. So that's going to be the next one. The next one after that also is those one-timers, the one-time expenses that you've actually had. Did you have a major roof repair? Did you have explore the idea of franchising your business and you spend a lot of time talking to an attorney about that so he can explain it to you? Did you have a lawsuit settlement? Or did you have a consultant come into your business and tell you how to better run it? So, and is that project that's over? So those are all the different things that you can actually, so it's like looking at those reoccurring costs. The ones that you're just a one time on an annual basis, we can add those back too. So what's the strategy? All right. So before you file your 2020 file taxes, why don't you have a pre-flight with your lender so they can take a look at the draft copies and say, hey, there you have that massive one-time write-off now, but that might kill your ability to get lending in the future, or that warehouse you want to buy, or that piece of equipment you want to purchase. You want to take a look at it because they're going to look at your taxes and they're going to go, you don't have the ability to repay us because you've got too many expenses. That's where a lender will be able to give you some insight. So it's a balancing act between the two magicians, the CPA and then also the lender, so that you can be able to finance the future growth of your business. You may want to go back and look at the last video I did on the liquidity trap, which is you want to borrow money now for so that you can finance the growth of your business so that you can actually pay it back with cheaper dollars in the future. That's a whole nother video that I did the other day. So look for that one on the site. So how can your CPA save you money? That's what their job is. But my job is to get you money, to help you grow the business. Hi, Jill. How are you? Thanks for joining in. You both need the magicians in your corner. You need both of the people to advocate for you and get their jobs done, but not so be aggressive that you're only one is weighing out the other one. Because then you're not going to be able to scale your business by borrowing the money and using the bank's capital. So don't let a perfect tax return where you owe no money stand in the way of a perfect expansion. If you're worried that you look a little too much like a pauper on paper, tell you what, let me take a look, reach out, and we'll find a king there in the finding in the hidden notebooks. And then we'll be able to help you finance the growth of your business. I'm Jeff Ogan, and keep your finger on the capital pulse of your business. I'll see you guys tomorrow. If you have questions, by all means, reach out. Thank you so much. Have a great night.